Despite a recent sell-off and an aggressive and long sell-off in the price of energy and energy stocks, we're finally seeing 2 days of strong recovery. This comes after we had seen 7 days consecutively in the red, the longest stretch since 2019 when we were on the path to energy independence. U.S. producers were producing like there was no tomorrow. It was drill, baby, drill. The longest streak since drill, baby, drill. A longer streak than we had seen in the depths of the COVID pandemic during peak uncertainty, where we had seen negative $37 a barrel oil. That has not happened. But why did we see negative $37 a barrel oil? Because of this phenomenon of paper traders. And on this channel, we don't like the paper traders. They shouldn't be there. They're not part of the supply and demand. We don't get efficient markets because of their existence. That's why we saw 7 days of panic. I'm sure the airlines loved that. They locked in some contracts. But us, who are trying to, focus on the long game, they don't really help us. They kind of boil our blood, so to speak. But their presence has led to this aggressive whiplash, and it leads to volatility in the market, and the White House is particularly worried about this. Yesterday, on the first day of this rise that has now gone on for 2 days and resulted in over 8% positivity in the price of oil in just 2 days, which is obviously not just consumption and supply, that's speculation and paper traders. White House is doing its biggest ever offering of emergency reserves into the market, 20 million barrels. Now, that's not even a single day of U.S. production, but, 20 million barrels to just store takes up a lot of space. Not a lot of people are having that kind of storage. But despite that, the market just did not react and is continuing to be hot. Let's not forget, the White House had also previously asked OPEC to increase production. The White House on its first day decided to limit onshore drilling on federal lands. I've made this analogy before, and I'm going to make it again. The White House is acting very similar with OPEC as they would with cocaine. Now, they don't like oil. We know that. The White House also doesn't like cocaine. Imagine if the White House went to Pablo Escobar and said, hey, Pablo Escobar, the price of cocaine is too expensive, and we think it's going to get more expensive. We need you to produce more cocaine. That's exactly what the White House did last week when they asked OPEC to increase production. But then OPEC said no. So we expect on this channel a longer-term recovery of energy prices. And when energy prices were last around here, $67, $68 a barrel, oil services ETF was around $240 a share. That was just 2 months ago. It's right now at $183. So just assuming the price per barrel of oil, and we've only seen the move in energy stocks for 2 days, the price of oil we only saw capitulate in the last few weeks. Stocks have been coming down for several weeks, now a couple months, because of Delta fears. We should expect a $60 move in OIH, the services ETF, just on a catch-up basis. But we also expect the price per barrel to go up into the $80 to $100 range. That means OAH is going to have a serious move here, and we're remaining aggressively long, and it's a position we like. In addition to majors like Exxon, which not only are going to benefit from the recovering price of oil, but are also well positioned for the future of energy in a renewable economy. So their multiple should be significantly higher than where it is right now when many investors assume their imminent death. So there's a lot of potential still in this industry. The 2-day rise, yes, it's an aggressive 2-day rise, and we're just going to have to stick with it. I don't know what it's going to do tomorrow. I don't know what it's going to do the day after that, but I feel pretty confident that over the next several weeks and several months, and possibly even several years, this is going to be a winning trade, and it's very well priced right now. In a market that's very expensive with not much obvious opportunity, a lot of the energy stocks continue to present what I believe is very obvious opportunity, and I'm weighted here. I'm also weighted in obscure reopening plays, like, for example, Ashford Hospitality Trust. No, hospitality, reopening. The stock is down. If you compare it, this is a comparison I'm making now today, seeing how it's reacting in tandem with the energy stocks. If you look at how it shot down from its most recent 1-year high, it came to this high very much in tandem, basically the average of Schlumberger and Exxon, but turns down at the same time as Schlumberger and Exxon, which leads me to believe it's in the same sort of reopening basket, which is the same victim of the Delta fears, and now is turning around with the energy stocks. So I believe this stock can get back to its 52-week high. I believe the energy stocks are going to get back to its 52-week high. And that's another one I'm throwing into the energy-like basket. So I'm remaining long these positions, remaining long this mindset. We're going to see what happens. And until next time, peace out.